On July 29th, Tesla will have their grand opening for their Gigafactory in Nevada. We believe this will send lithium stocks soaring. Our last suggestion has doubled since March 28th. To learn more about this sector and our newly released lithium investment recommendation, visit crushthestreet.com/whitegold.
Hello, everyone, and welcome into crushthestreet.com. I am Kenneth Amaduri, and I'm joined today with someone very interesting, actually, specifically today to speak to with all that's going on in the markets. The Dow has had a big move down today, and silver and gold are up pretty substantially. Even Bitcoin is up. I'm looking at it at the moment. And it was all primarily on jobs news. The jobs report came out, and unemployment actually went down, but simply because 600,000 people fell out of the labor force, and the markets actually responded in some sort of an actual fear. There was a panic that happened, and we're going to get the thoughts from David Trungale here of TraderTours.com. He's a market expert, a full-time trader, and he's someone who shares his trades through his subscription service at his site, and he has been a valuable resource to us here, giving us incredible insight on precious metals, the stock market, individual stocks. So David, thanks for joining me today.
Well, thanks for having me back, Kenneth. It's always a pleasure.
David, I got to ask you about what we're seeing today. Would you say the action, the market movements today, especially with the Dow Jones going down based on these fundamental numbers, is this something that would defy technical analysis in your opinion?
Well, no, it wouldn't. And the reason why is the media and various sources will always do a great job of justifying price movements because that's what they're paid to do. So I guess the real question you have to ask yourself is, we're seeing right now the Dow is down $43 per share, give or take. Is that really a result of unemployment numbers or job numbers? I mean, do you really think that these big time money managers and institutions are moving billions of dollars based on daily hype? That's the way I look at it. I mean, I don't really try and rationalize market moves. I stick with my technical assessment for a very simple reason. It's what's worked for me longer term. So when I'm placing a trade, I'm doing it for one reason, to make money. And if my system doesn't work, then it's time to make a change. But long-term technical analysis has led to more profits for me than following news or other media sources. Mm-hmm. And as I've discussed before, or when you look at a chart, technical analysis, it's really the summation of all market factors. This includes job reports, earnings, anticipation of earnings, market manipulation, the whole thing, insider trading. It's all packed into the charts, and the charts don't lie. They show you the facts. That's why I love them. Mm-hmm. So my hypothesis and my trading theme has always been that you should block out the noise and look at market action, and you'll make the most money that way. But I don't want to try and paint this picture that states that trading's easy. It's not. You will have setbacks. I've had numerous setbacks in my career. I've had losses. And there are times right now, if you look at the longer term perspective on the Dow, going back over the last 2 years or so, the pattern's really been sideways more than anything. Okay, so everyone's screaming market crash, and I've gone record stating, hey, we may be in a recession, and if we are, it's in the very early stages of such. But with that being said, these movements take a long time to play out. In fact, I'm looking at a 3-year weekly chart right now. So really the last high the Dow set, as far as an all-time high goes, was way back in May of 2015 at around 18,350. We saw that very volatile trading session over summer. It plummeted down below 16,000. It rallied back and went down again. And now here we are over the last 6 months or so. We've seen a rally, but now shorter term, you're right, we're going back down. So this may be another leg down. It's very hard for me to read. The bottom line here is if you are still bullish on stocks, I would encourage you to be very cautious. I personally have taken pretty much all my money off the table, and I have one defensive dividend play that's available in my letter right now. But be careful, and I would say longer term, the U.S. stock market probably is the next item to come down because of the fact that it's a high point.
Okay, so David, let's talk about the stock market a little bit here. What are the technicals you are looking at? Are there some key numbers that you feel if we go towards, we hit on the high side, hit on the low side, that would indicate some future potential moves, significant moves?
Well, sure. I use long-term moving averages. There is no magic moving average to use, but those lines can give you a great idea of where you're at in the market and get a feel for the trend. The 200 is a big one. If you want to go real long-term, you can even put a 400 or 500-day moving average on the Dow, and that certainly has rolled over to some extent. Like I said, we're going through these volatile swings, and we may be in for another move down. If you want to get shorter term, and by the way, Ken, for the perspective, just trying to reach out to your audience here, and when I do these interviews, I'm usually trying to assess things on a longer term scale, because if I tell you right now, we'll short the Dow, it's going lower. Well, what does that really mean? It might go down, next week and then pop back. So that's why I have the email support at my website so I can communicate with people. Perfect example, last time, or not last time, but I think it was maybe 6 months ago or a year ago, I was talking about Disney, and that was a trade I had done very well on. But then in a single day, there was a 10-point drop supplemented with a downward gap, which is a bearish sign, and that triggered me to sell out. Well, again, I wasn't on an interview like this, so I couldn't tell the audience that. So I shot out an email to all my subscribers. I reached out to Dan. I said, hey, I think it's going down. But then when I followed up a month later, it had already fallen more. So communication is key with these short-term trades. So again, I don't get too short-term, on these particular markets. But longer term, what would I expect for the Dow? We'll probably continue to trade sideways, and we may transition into a bear market longer term. And it's hard for me to put an exact number on this. And I always tell people, too, if you're not sure, it's okay just to step back, and, you don't have to do anything crazy. Just start small, and if things go well, you can always add to a position later on. So even if you are someone that bought an inverse ETF against the Dow, or you're buying puts, see how it goes. And if we continue to drop, and, hey, maybe if we do take another leg down and we blast through that lower support level of 16,000, you could always add to a position that way.
So, David, looking strictly at the technicals, what are we seeing with the metals at the moment? Are you bullish or bearish? And to what degree are you in either direction?
Well, I have been on record stating for a long time that I'm still bearish on commodities. I'll have to go out and state right now, though, that I'm not as bearish as I used to be, given the fact that gold and silver have fallen so much over the years. That doesn't mean that I think they won't go lower, because I still think that they could. I still think that new 52-week lows could be tested. It all depends on your time frame and what perspective we're looking at. Obviously, over the last 6 months, both gold and silver have had a rally, but I still would call this a rally within a long-term bear market. And one thing about market psychology and technical analysis is that when something falls from a historic high, such as gold and silver did, they've come down quite a bit since their 2011 all-time highs. It's always going to be pretty difficult to recover. There's a lot of resistance to overcome. So as these markets attempt to climb, a lot of people that got hurt are going to sell into that strength, and resistance will be hit, and it will knock the price back down. But as far as long-term forecasts, again, with technical analysis, even though I have made price predictions in the past, I try and stay away from it, and that's because market conditions can change. So silver, for example, if you were to ask me, where do I think it's going to be in 5 years? The truth is, I really don't know. I mean, if I had to take a wild guess, maybe somewhere where it's at now, but that could totally change if silver keeps going up. If silver breaks, let's say $20 or $25 an ounce, that would be indicative that it could perhaps go higher. And then my next target might be 30 or 35. And if that happened, then it could, so what I'm getting at is you have to take things one step at a time. I don't see, though, this current rally as a signal that we're in a new powerful bull market, at least at this time. So, my year-end assessment on silver, I mean, I could give you a pretty broad range where I think it will be, probably somewhere in between $10 and $20 an ounce, where it's at now. This consolidation has been pretty extensive longer term, but I still would consider myself a commodity bear. But I'd like to reiterate one more time that, because of the fact that gold and silver have fallen so much, there probably is more room for the Dow to fall than gold and silver. But what people fail to mention is that just because something may have bottomed, and again, I want to be clear here, I've said silver could go to 12 or lower. I still think that could be the case, but even if I'm wrong, and let's just hypothetically say the bottom for silver is in, what people don't talk about is the fact that just because something has bottomed, or if it has bottomed, markets tend to move sideways for a while. They consolidate. So a lot of people might look at this and say, oh, it's a great buying opportunity. Well, again, that's not necessarily true. I mean, what if silver sits here at about 15 an ounce and it does that for the next 2 years? That's not really a lucrative market to be in unless, of course, you're selling calls that are out of the money or you're trading that particular pattern. So I'm assuming that most people that are listening to this, again, they're purchasing silver if they are from an investment perspective or from a speculative perspective. Buying now and they're hoping to sell to someone else at a higher price in the future.
David, thanks again for coming on the show with me and sharing with us your insights and analysis. If people want to learn more about what you do and the services you offer, where would they go and what would they find?
Well, it's really pretty simple. You can just go to the website, TraderTours.com. It's an email newsletter that I send out, and it's also supplemented with trading packets. I actually have some PDFs and guides that I shoot out via email. It goes over some very specific patterns and things that I like to see. This way, it's more than just a one-year subscription. It's information they can take with themselves for the rest of their lives. That's why a lot of people come to my website. But again, the report itself, I put out emails every 2 to 3 weeks or so, just general market details, trade ideas, things of that nature. You also obviously get email support for myself. So it's not the type of deal where you sign up and I'm turning my back on you. 24-hour support is there. If you have a question or you want me to bounce my thoughts off of a trade idea, just shoot me an email and I'm there to help.
Everyone, this is David Trungale with TraderTours.com. Again, David, thanks for coming on the show with me today.
Well, it's been fun, Kenneth, and thanks again for inviting me.